Everybody was kung fu fighting. Those kids were fast as lightning. In fact, it was a little bit frightening.
Good afternoon. This is Mr. Not Advice. It is Friday, April 11th, 2025. This is my weekend update. Got a lot to go over. I thought I'd start off with China, treasury rates, and all of that. So generally speaking, there seems to be three opinions as to where the selling has come from in U.S. treasuries to force that are spiking rates. So the first reason would be foreigners selling U.S. treasuries, foreigners being U.S., China, and other foreign countries. Number two could be the VIX was at 50 this week, so there's probably a lot of hedging activity going on. So this could just be risk reduction. And then the basis trade. The basis trade is $1 trillion. So what we could be seeing is an unwinding of the basis trade. And so I have, my opinion was this week that it was primarily basis trade, margin, a rush to liquidity for basis traders. Remember, the average leverage in those trades is 20x. So even a slight movement in the interest rates is going to greatly affect the spread at which they capture to make their trades profitable. And in a volatile environment like we're in, that selling could be pushing the rates up. So I'm looking at it now that I think it's probably all three of them, with the foreigners selling is probably going to pick up with the VIX falling down to 37. I think unless we get another spike, that hedging might be done. And the basis trade, if it is unwinding, we're not seeing it affect the Japanese market, which would be the largest market for that trade. And we'll get to the reason why we may not be seeing it yet. But if we look at one of the things that I was looking at is, okay, if China's liquidating their treasury holdings, how are they doing it? Well, courtesy of Zero Hedge, they are doing it through Belgium because Belgium acts like a proxy for China, and they do it through what's called a Euroclear market. As a side note, that pisses me off. If Belgium is obviously part of the EU, we're supposed to be allies, and they're enabling that. So whatever. So what exactly can we look at in terms of what kind of damage can China do? It's fairly limited. They have, as I said, only about 3% of the treasury market, and once they're done selling, they're done. I believe, looking at some news reports, that Zero Hedge had reported that over 1,000 Chinese factories have already been shut down. Now, why haven't we heard about this? Because China controls its state press. And China does not want to appear as though they are weakening in the face of the US. It's literally the standard Chinese tactic. I've watched this for 30 years with disgust. I am of the opinion that China continues to paint themselves into a corner. They are limited in their response and what they can do. For example, at some point they will run out of U.S. treasuries to sell in order to support the yuan. And what happens if the yuan continues to devalue? The same thing that would happens here if the U.S. dollar devalues, as it has been. You'll see a spike in rates. So it's a game of chicken that China's playing that they can't possibly win. I mean, there is no economist out there or analyst with half of a brain that says if this drags on, China's going to come out the victor. Now, next week, China is, they announced this week that they're going to do 4 official state visits to Asian countries, of which Vietnam, Thailand, and Malaysia, I think, are 3 of them. And that's when I believe we're going to see Trump's comments and how good how strong their commitment, verbal commitment was to go to a zero tariff policy, because now they have their neighbor and the bully of the neighborhood visiting them, and you can be darn sure they're going to apply a tremendous amount of pressure and threats privately that they need to stand with China. That's not working so far. Australia today said, no, we're not going to stand with you. India said, we're not going to stand with you. Okay. It remains to be seen what Europe's going to do. But quite frankly, we had, I believe it was the European finance minister come out and say she would like to have zero tariffs, or maybe it was a trade minister. So I don't see how China, all they're doing is continuing to isolate themselves even more, and they have limited tools. We had news today that China announced that for large asset managers, domestic asset managers, that they will be limited in the number of shares they can sell in a company. That's not quite a short ban, but that is also the sign of a country that is desperately trying to show the world that it's not hurting, that the tariffs aren't hurting them. So now we go over to the US side of the pond, right? You're hearing a lot about liquidity. What does that mean? Well, liquidity is exactly what it sounds. When you have money leaving the stock market, okay, that's liquidity. If money's leaving the stock market for safety, for gold, that is where you have liquidity. Now, liquidity issues have more to do with cross-border trade. And I want to show you this chart here. So this is the cross-border flows into U.S. government bonds. So you're going to hear a lot in the news how this week foreign countries were net sellers. Well, they were, of long duration bonds. But if we look, they pretty much, the selling was $1 billion of selling, and yet the buying in short duration was 1.5 billion. Look, the net effect this week was foreigners were selling them U.S. bonds, but they were buying them right back. Okay. In fact, the fear is so great right now that we've got USA sovereign risk. So these are credit deferred swaps. And what this is insurance in case the issuer, in this case, the US, were to default on its debt. Okay. This chart to me is hilarious. There is no way that our CDS should be above that of Spain and France. We are a much more diversified nation, and this is entirely uh, an overreaction, an emotional reaction. But you're going to see all over FinTwit, oh my gosh, 1 year CDS is blowing out. Okay, it is, but it's not going to stick up there, right? S&P stock bid-ask spread has now stretched out to 20 basis points. So if you think about that, we're normally, we'd be around a 10-cent spread. Now it's at a 20-cent spread. So that's another reason why some of our option trades aren't working, because they're also expect this big spread. And that has to do, again, with liquidity, with money coming out of the stock market, okay? Even more confusing this week was the Fed came out, I think it was yesterday. New York Fed President Williams said, quote, current rate stance remains appropriate, which is funny because when the Fed was cutting last September, right, a big cut, financial conditions were actually worse than they are now. So there is this thing, that a belief that Jerome Powell despises Trump, and I think he does. It would make sense. He's an elitist. However, here's the problem now. The United States of America's largest bank, JP Morgan, came out and said to the Fed, we are in a liquidity event now, meaning the Fed, you need to inject liquidity into the monetary system. And that could be done in any number of ways. Okay. Direct injection of debt, a lowering of rates. And what Diamond is most concerned about is the same thing that there was concern in 2008 and 2021 with COVID, is that the lending market freezes up, right? He's trying to get, banks are not lending right now. And if banks are not lending, then money's not moving around, and that's where you get a clogged up system. So if Jerome Powell doesn't cut rates or do something in order to help the market, and I'm not saying he should, okay, then it won't be just that, oh, he did it because he thought he was right and it turned out to be wrong. And when we, guys like me say, oh, you're doing it to F Trump. Now he will do it after the head of the largest bank in America said he needs to be doing it. So it's become a little bit tougher for Powell sort of sit on the sides now, which very interestingly, after JP Morgan said that, late today, Boston Fed President Susan Collins came out and said the Federal Reserve would absolutely be prepared to deploy its firepower to stabilize financial markets should conditions become disorderly. And she added that the Fed does have tools to address concerns about market functioning and liquidity should they arise. And there was a but. But Collins said markets are continuing to function well, and that we're not seeing any liquidity concerns overall. In other words, the Fed has a liquidity put, meaning there is a point. They just don't think there's a liquidity crisis. However, then you get JP Morgan coming out and saying there is a liquidity crisis going on right now. So while the Fed can continue to ignore warnings by, JP Morgan, many other economists, that right now the financial system is starting to gum up because liquidity is not passing through. There's so much selling going on in treasuries. There's so much risk going on or selling going on in stocks, I mean. There's a rush to liquidity in treasuries that it's not a normal, if we want to use standard deviation, it's way outside of a standard deviation of liquidity situations. My takeaway is very simple, tying this all up. I actually think, mainstream press is Trump folded. And I look at that and I say, how did he fold? He still was able to get 10% tariffs slapped on every single country. He's got 75 countries coming to the table. Okay. Certainly the treasury market, it's not only keying off the US, it's keying off of the basis trade, it's keying off of risk managers hedging, and it's keying off of what China is trying to do. But I actually think that China stepped into a deep pile of crap and sort of got tricked, because at this point, Trump has said, at least on four occasions, and he said it before he put the tariffs on, all they have to do is pick up the phone and call. And they refuse to call, right? China. And this is so typical of China, okay? They are a proud nation. They hate to lose face. They're a stubborn nation, and they never think they're wrong. And for those of you listeners that do not know, I was born in Asia also. And so I carry a unique perspective also because I've done a fair amount of investment banking in the 90s, early 90s, mid 90s in Shenzhen, China. So my opinion of China and business comes from first person interaction. The people that I interacted with and the culture that I interacted with was there's nothing wrong with taking advantage of foreigners if it supports the outlook and the view of the CCP. There is completely nothing wrong with it. Okay. And that's not fair trade. So, privately, personally, I'm just watching this. I've got my popcorn out and I just can't wait for China to get theirs. However, at the end of the day, obviously, any disruption within China is going to affect the rest of the world. Now, for those of you out there that said tariffs are inflationary, okay. Well, China also announced that they're going to just start dumping any excess inventory they have into African and into the Eurozone. When you dump product, it brings the prices of the other products down. That's deflationary, okay? So I've said repeatedly over and over again that any inflationary effects that are done due or that occur due to tariffs are short-term in nature in this current economic environment, right? None of these data points operate individually. They all are integrated and interrelated to these other data points. So it's very difficult and it's very stupid to point to one data point and then extract an entire thesis, right? We talked about this earlier this week. Um, as a quick side note before I go on, um, Goldman did a study where when the single stock 1 month put call ratio gets high, which means when retail is buying a crap ton of puts, it signals a bottom. Again, they're late. And sure enough, we're starting to spike. You can see on this chart here. So are we at the bottom? No, we're not at the bottom. Do I think that the market has put in a temporary bottom? Let's take a look. So looking at the S&P 500, first we'll look at the week. Obviously massive volatility and not. I will tell you that I was surprised yesterday that there was no follow through from the previous day because we've had some pretty benign economic news come out. We had core prices drop other than the University of Michigan sentiment index, which of course they're spiking that. I think it's a political thing because they're the only region that's reporting inflation. So, but we've seen already prices come down. The price of oil is, I think we are below $60, and yeah, oh, 61.48. So we had a bounce. But this is a massive drop in oil. We should start seeing the drop at the pumps this next week. Anywhere I'm reading from 20 to 30 cents right off the bat. That's a big deal, guys. Think about it. You fill up your car, you have 15 gallons. If you're paying 30 cents less, that's $5 less. How many times a week do you fill up your car? How many times a month? That's extra money in your pocket, right? And so I've always said that one of the best tax cuts that you can give, the quickest way to inject it into the economy, stimulus, is to get the price of oil down. So, but looking at the market itself, yes, I was not. I was surprised we didn't follow through. But today is today an all clear to go long? No way. We still had a wide range on the SPY today. 536 all the way down to 520. That's too wide at this point. Too wide right now. So what do I think is going to happen? Well, I'm not doing anything on the SPY until we get at least above 576-ish. Why? I have the point of control here, major resistance. I have the 200-day moving average here, major resistance. And then I have this peak right here, also major resistance. So until we get out of the woods, I'm not going to look at going long the SPY, nor will I trust that any trend is intact, okay, intact. We have the same thing with the Qs. Yeah, the Qs bottomed, okay, had a low close doji on Wednesday, trigger. We had this pullback, and today was sort of treading water with yesterday. But what do we have above us? 200-day moving average. We have the point of control, and again, this level here. Why, oh, why would you want to go into that stock now, right? Or why would you want to get long knowing that you have that sitting above you? Looking at the 10-year rate today, 10-year rate up, but nice selling tail here. Does that mean this is done? No. But remember that the initial reaction in times like this is always the worst reaction. It's always the greatest fear. This too will come to pass, and the market will grow a thicker skin. If you look at what Trump did, he put a 90-day pause and still maintained the 10% tariffs flat. That 90-day pause is for negotiations that should have provided, in my mind, some market stability. And the only reason it didn't, because somebody, perhaps all three parties, were spiking U.S. interest rates. So Uh, I will tell you, I've got elevated concern when I hear JP Morgan talking about liquidity issues and the system gumming up. That's starting to use the same verbiage as I heard in 2020 and 2008. Okay, when when banks when banks don't know which rates are going to go on an intraday basis, they don't want to lend. And if they're not lending, there's no transactional volume. And the only way banks make money is to lend money. So if they're not lending money, that gums up the system. Okay. Um, and as for the stock market, I am not looking long until we break those levels. What do I think is going to happen? Well, the last time the Chinese did this in 2018, they used the same exact words that the fight to the end and blah blah blah, and within 30 days they were at the table. Okay, I suspect by the end of April that they will have spoken. Not that they will have a deal, but they will at least have spoken. And if we get that, the market's going to rally. China right now is trying to do everything it can to pretend that they are a strong enough economy that they do not need the US, and nobody believes them. Okay, nobody believes that. And what's interesting is they actually think that that's what the world believes, though. It's part of that whole insane CCP closed environment fishbowl. Same thing happens in DC, right? And so I think they're going to come to the table. Now, if they don't talk, then there are going to be some serious consequences for the US economy. But again, it has to do with how much pain can the US economy put up with. Some of the increases in any inflationary increases as a result of China tariffs are going to be offset by the drop in fuel costs. Okay, not all of it. We also are seeing for the first time, that was the other positive detail this week. We had for the first time, I don't know how many months or years, the U.S. trade deficit dropped. It's a start in the right direction. Couple other notes. Elon Musk started at 2 trillion in savings. Now we're down to a trillion. Now we're down to 150 billion. So I'm calling bullshit, and I don't know why that's happening. He hasn't been taking questions, but that's infuriating to me. So we'll have to see. I know where they want to pull it from. They think they can pull 600 billion in savings from closing down the fraud in Social Security and Medicaid. They are the conversation with one of the senators. They can pull another 400 billion out of the IRA tax credit, but it wouldn't be a blanket canceling. My belief is that if that were to happen, it will not affect EOSE Energy or its customers. But and the Republicans are saying that they will. The House has passed Trump's spending bill, but some hardline Republican senators saying, "Look, we're not going to pass it unless there's at least 1.5 trillion dollars in fiscal savings." And I don't know if they're going to be able to get to that. So one final note I will say to you before we go into so much more charts is I believe that the wild card that Trump has up his sleeve is that by the end of 2025, anybody making under $150,000 is not going to pay income tax anymore. And that will be a major stimulus into the economy. So what I'm looking for is right now in the mid and short term, I want to continue to see as I gain confidence. What I will gain confidence from is if we see countries signing deals. You can talk all you want, but until the ink is dried, nothing happens. So signing deals, that will give me more confidence, and that will tell me that the narrative, that it's gaining momentum, it's gaining steam, just like price momentum. In a public arena, there's always a battle between which narrative is going to grab the public's attention and which one they will go with. So I am not concerned by the spike in interest rates. We already had this week a market participants saying that we were headed for a huge crash because of liquidity issues. No, that didn't happen. We didn't hear any huge banks blowing up or PE firms or hedgies blowing up. And that doesn't mean we won't see that happen. But at this time, yeah, risks are elevated. I am concerned that when I hear comments about that liquidity in the system is dried up and it's sort of gumming up the plumbing, that is a concern. But ultimately, I am, believe it or not, neutral to bullish at this point. Now, there are no geopolitical events that I think could happen later this year that would cause me to be bearish, but I'm not there yet. I think we are still in, obviously, a sell the rip mode. And to speak to that, the buyers on the dips have been retail. Why? Well, that's what they've been trained to do, and that eventually is gonna leave a mark. Okay, meaning they're gonna get hosed. So I'm still in a sell the rip mode. I don't know how anybody could possibly want to be going long here. And my level of support on the SPX is, I'll show you here. I'm going to put my level of support right here around that 5,000 to 49.47 where we bounced before, right? If we break that, then I think we get possibly another leg down. What could be the trigger for that? If China goes full bore and really slams the treasury market and selling. But again, they only have a limited number of bullets. And so they can do it, but immediately, it's like it's like any other supply and demand market. If supply overwhelms demand, the value goes down. But if that's an inorganic supply burst, when it ends, whatever asset it is will go right back up. So looking at a macroeconomic picture, as I said, the economic numbers out this week were positive. They were helpful. And so I was sort of surprised that we did not see more strengthening in the market. Looking at individual stocks, we closed our WPM today, gold stock, and we were able to get out of that for a 210% gain in a little over what, 4 weeks. So we did close WPM. I also closed my group bond runners this week. My TLT trade I'm looking at here, there really is, really nothing to do on it yet. Let me pull up the daily. If rates continue to spike, we're going to see the TLT continue to drop because this moves inversely to the 10-year interest rate. So as rates go up, this one goes down. If we want to gain a perspective of how long or what this did the previous time around, let's take a look here. So looking at this, if you want to see how far this could go relative to history, right there, okay, that's COVID. And that was when the Fed was really enforcing the zero interest rate policy. Looking at where we're at now, we have a lot of room, okay, for the 10 and the 20 to drop. And if that happens, this is absolutely going to go up in value. So I still am of the opinion that rates will drop towards mid to end of the year, either by force or by natural market, organic market moves. Right now, the market is incredibly nervous, and probably rightfully so. But they're straight line extrapolating that this is going to last forever, and it won't. So. Looking at EOSE today, we broke above the 416 level and closed above it. 423 was the close. This was a strong close. That was followed after yesterday's strong, where we finished a penny higher in the green, even though the entire market was down. So I will be looking to construct a trade on this for the weekend, but of course, I always have that Monday morning whether or not to execute or not. It bounced off the 200-day moving average very strongly, and of course, the CEO was on Fox Business News yesterday and Fox News today. I think there were five different appearances. So I like to see that they're getting the word out. I am I wrote if you haven't had a chance on Twitter, I wrote a thread about why EOSE could be a unicorn in hiding in front of us. So NVX just sucks right now, only because there's no news, there's no volume. If you know, I own Leaps, but if I was in the stock, any spike I'd be using to lighten up. I do not think that right now NVX. I think NVX has a great deal of risk vis-a-vis what's going on over in Asia, as well as if there's a general slowdown in tech spending due to a global slowdown in spending. So, and I'm not even going to speak about the rest of the stuff that I don't like about NFX. BYON, I'm still looking to short this thing. It's garbage, and I will enjoy shorting it. I just wanted to get up here so I can have a higher short price. So, you know, what are the things that I am looking at buying? Well, looking to buy, you know, EOSE, perhaps. I am not going to add to my go back into the gold trade. Let's take a look at Tesla. Tesla today had a marginally positive day, but what I see here on the most recent candles is we had a nice green spike here off the bottoms and off this support level. Interestingly, I had told Shaner that I thought 214 was going to be the low, and we hit 214.25. I still think that. I still think if the market can get going, the overall, I mean, what more can they do to Tesla, right? I mean, for weeks, they're burning his cars, they're calling him a Nazi, the press is after him, and yet the stock still sits here at 252. So a couple other companies that I am looking at, I'm watching PCT. I'm just trying to, this is the channel that it's in right now, so I'm watching it as a long shot. I'm going to try to set up a podcast call with their CEO. He doesn't know me from Adam, but let's see. Well, might as well give it a shot. Also looking at OKLO, it was just awarded a contract by the Defense Department to build as one of a group, I think up to 20 micronuclear reactors. So I'm watching that. I'm also, of course, watching the UVXE. Our Fight Club bot will be done next week. It's been a hectic and busy week this week, so all it remains is optimization. One other thing of note is if you look at Bitcoin, right? While we had the sell-off in the equity markets, Bitcoin didn't drop as much. Also, you're bouncing off of this 200-day moving average. I'm not saying that it cannot go lower, but this was, it performed and held up quite well, honestly. I didn't hear any concerns about massive liquidations in Bitcoin. I didn't hear, it's been very, very quiet, which, you know, is sort of surprising uh, because Bitcoin is not a community, quite frankly, that is generally that quiet. So looking forward to the next week, we're going to have to see, let's go back to the SPX. We're going to have to see, and I think it'd be constructive to look at the weekly chart. Okay, all we had this week was a lower high and a lower low. This is in a downtrend, right? 3 candles. We are bouncing at support. This is a big time level, right? That 500, that 5,000 level was a big time level. Now we bounced off of it, closed 363 up. So, you know, we're closed 3.7% higher. That's great. We want to see that. So actually that math isn't right. We go from 5,000 to 5,300. 3,000 over 5 is 3/5. 6%. Yeah. Okay. So what I'm thinking is we're either going to get a bounce right here, and it looks like we will, barring any extremely bad news over the weekend. I think the market will continue to bounce, but the market's going to continue to key off of news releases about tariffs. However, we had news today on tariffs, and the market was pretty, you know, fairly not ignoring it, but if anything, it didn't react to some positive news about tariffs with countries coming and wanting to cut deals. So next week, watching to get reports to see how the state visits go, mostly to see if any of those countries flip right after China visits. I will also be watching to see these levels on the S&P 500, if this 5,000 level will hold, okay, and if we can break above 5,500. So that's really my range now, 5,500 to 5,000. Then you have this massive, right, 200-day moving average sitting above here. So I think we're in a battle zone right now from 5,000 to 5,500. And then the next battle zone will be from 5,500 all the way up to 5,800, okay, right here. And then the final battle zone from 5,800 all the way up here. Before I go, I want to share a couple stories with you. I had a number of members contact me this week and let me know how well they're doing. And what I just want to share is, if you're listening to this and you like my podcast and everything, and you've never checked out my Discord, it's free. Come on in. And what I've got is almost 400 traders and people that want to learn, all the way up from current fund managers, bank CEOs, former C-suite executives at tech companies, all the way down to people who don't know anything. And we're a big community where we learn together. I do a lot of teaching and coaching, a lot of live free sessions. But if you're serious about that, you would like to be exposed to a way to invest that removes emotion and removes bias, and do it in a community where, you know, if an investment loses, you're not going to get, personally attacked for any idea, for an investment idea you had. Really, it's the best professional level Discord that's out there. I don't know of any other Discord like it. So I would encourage you to stop and take a visit. Other than that, I hope you have a fantastic weekend, and feel free to reach me at theboss@mrnotadvice.com, or on Twitter, where you can find me at Mr. Not Advice, same place on YouTube, and of course, I am on Spotify too. Thank you very much, and have a great weekend.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the coattails of the next man. Passport in my left hand, thinking that you are next. Heck, hope you ain't holding your breath, man, cause I'm out here, I'm hungry. I don't play around, trust me. Ain't had as much drive since my Honda Civic got rusty, and my girl said that she loved me. It's funny, just thinking back, study hard for that 9 to 5, like I thought that I should be good with that. It was dreaming, still dreaming. Spotlight on me like Willie Beamen.